Plant property equipment. This is the NDAs we need to see right now. What is this plant property equipment? Objective of the standard to Objective of the standard to prescribe the accounting treatment for property, accounting treatment for plant, accounting treatment for equipment, so that used in the financial statements can be concern information about the entity's investment in the property, plant, and equipment. So how they invest in plant, property, equipment, how they have changed the investment. To get this information for the end user, they use this. The principal issue in the accounting of plant, accounting of property, accounting of equipment is recognition of asset, determination of the carrying amount, and the depreciation charges and impairment of loss to the recognized relation to them. What I was saying. So the problem actually comes in what is this plant property equipment? How much depreciation is being charged, and how it is being recognized, how is being de-recognized, and these are the things that are being problem in plant property equipment. What is the plant, what is not plant, what is expenses, what is the capital asset expense, capital expenses, what is the revenue expenses. Now what should be considered as investment, what should be considered as expenses. That kind of problems is happening, and this NDA is not only give clarity to our Indian companies, but also consolidate financial statement on various assets which is in the various countries. When you bring into India in consolidated financial statement, it helps in greatly. The property, plant, and equipments are tangible items. These are tangible items as held on the use of production of supply of goods or services for rental to others and administrative purposes. So properties are tangible items. So what are this plant property equipments are tangible items, intangible items. Tangible, it is found as asset when it is used for production. I'm doing business of manufacturing the production, supply of goods and service. Sir, I'm having an car that helps to provide the supply services. So I'm using this tool to provide services for rental and others. So I'm using this and gaining the rent out of it. That is my asset. And if any other thing through that I'm generating revenue, this is an asset. And for administrative purposes, I'm using this to administrate my organization efficiency and operative effectiveness. So that I'm using it. This is also my plant property and equipment are expected to be used during more than 1 year. So I bought this. It's not going to be used a single year. It is going to be used more than 1 or more years. If that is the case and everything is satisfied, then it has been considered as plant property equipment. Recognition. What is to be recognized? The cost of item of property. What is the cost of item of property? What is the cost of item of plant and equipment shall be recognized as asset if it is probable that the future economic benefits associated with the item of the flow of entity. So if there is a probable, what is so I mean invest or something. So something I should get return out of it. Not only that, that should be probable to get the benefit in the future. That is the most important thing. The cost of item can be measured reliably. So what I have incurred, the cost that should be measured reliably, and items such as spare parts, items such as stand-up equipment, the servicing equipment are recognized as property, plant, and equipment if they meet the definition. So sometimes some assets we consider as what expenses, but these assets also can be considered as asset only the cost is the term may be measured reliably. Not only that, what kind of assets can be measured directly is spare parts. Big machinery spares has been gone. So how to capitalize the revenue expenditure? Stand-up equipment, how this equipment is bought and how it has been done. Servicing equipment, how it is being used. So bought this machine to only to service it, sir. So this life is this much. Such kind of things, how you will account it. Now the plant and property equipment, if they meet the definition, then it is classified as inventory. If not, it will be considered as what? Expenses. Measurement and recognition. What is an item of brand property equipment that qualifies as recognition as such shall be measured at cost. So first point, whatever the plant property equipment that should be measured in cost. What do you mean by measured at cost? What I incur to get that asset to place, that is cost. I'm not saying about fair value measurement. I'm not saying about market value of cost. I'm just saying what I incur to get it here. That is my cost. So that should be recognized as asset value. Now comes the question, element of cost, what purchase cost, purchase price. So invoice what here, including import duties and non-refundable purchase tax. We pay GST that we're not going to take input that should be added to purchase cost. We make customs duty that to be added to customs cost. Now after deduction, trade discount and rebates. So sometimes some taxes can be returned or refunded. That should be reduced from the cost. Even trade discount is given 20%, 5% discount. That should be reduced from this in purchase cost. So this is what on the invoice. This is all considered as purchase cost. Second, directly attributable necessary cost. What is directly attributable? The directly attributable cost to measure, bring the asset to the location and condition necessary for to be capable of operating in the manner intended by the manager. Was so in the place A, this machinery is there. I want to bring it to my place B. So for that, labor involved, transport involved. That is bringing asset to a condition. Sir, if not, sir, I bought the asset and I have need to install it. That installation requires some cost. That is attribute that directly attributable to necessary cost. So I bought all the asset. I finished it. Now question is, government or some organization need to come and they need to approve it. Until that is been approved, this is not my asset. Okay. Or if I example, if you have satellite mobile phones, you buy a mobile phone, not issue, but you want to utilize it in this country. Specifically, you bought this for this country. This country, if you want, there should be permission from a department. Until it is not being used in this country, then it is not an asset. Specifically for this, you want to get permission. That permission requires some cost. So that is that cost. Cost determining of restoration. What is that? The initial estimate of cost of dismantling and removing the item and restoring the sale with profit plan property equipment is located. What you are saying right now? So the cost of dismantling. What are you going to dismantle? So I have plant property equipment. I got to dismantle that and removing the item from that location. That cost is also a cost, right? What is the intent in our balance sheet? That's a good question. Sir, this asset I purchased somewhere. Okay. That is installed somewhere. Okay. I want to get that asset and install here. Okay. So I want to remove that asset from that place, disassemble it, transport it, I make it in my place. So I want to reassemble it, install it. So these are all the costs involved in doing it. Example, towers. Yeah, I'm a business of building towers. One of my competitor had 100 towers. Now he want to sell the towers to me, but I don't have the intent to use the location of the tower because due to the rent, I have a cheaper rent somewhere. So what I'm using with my intent, I going there, I getting all the transaction, I getting all the tools, I disassembling it and transporting it, bringing to my place and start assembling and finishing it and stating this is tower is my asset. So the cost of that is disassembling also including in the cost of my element, cost of my tower. So this element of cost like disassembling, assembling is also asset to me. Okay. Example, direct delivery deliverable cost. Direct deliverable costs and the cost of site preparation, initial delivering and handling cost, installation and disassembling cost. So these are the costs that is involved. Okay. Example costs that are not a cost of item, plant, property, equipment, a cost of operating new facility. The cost of conducting business in new location with a new class of customers, including cost of a stock training, administration, other general overhead cost. But I'm starting a business in some area that involves I'm bringing in new staffs there, and for other staff I need to give new training. That training also will be my cost. Example, costs that are not including carrying amount of item of plant property equipment. The cost incurred when the item capable of operating in a manner intended by the management has yet to brought into use or it is operated less than full capacity. Example, I had bought this machine. That machine is intended purpose to provide this much output. But unfortunately, even though I bought an, I'm not able to bring that into full production. So I bring in one export. He comes there, he sees the asset and he sees the process and determining why that is not being not performing as per its expectation. Then he computing all the things and he saying that this is the cost. Then after he yeah, he did the computation and he got that. Okay. And now this happened. What happens? They accepted it. Sorry. The team did the work and got that output. Now the cost of the team that came now that will be my cost because I want to achieve my full capacity. So I have incurred some cost. Initial operating losses, such as which incurs while demand of the in items output buildup and the cost of a reallocation, reorganization, all the entities operating. Sometimes reorganization that does a cost, that is cost of a business. Income related expenses of incidental operation recognition in profit and loss account. So these incidental expenses usually recognize in profit and loss account. That's administrative expense. They won't be usually capitalized. Sometimes it can be capitalized. That's what's being said here. Next concept is the PPE is acquired in exchange of non-monetary asset. What do you mean? PPE is acquired in exchange of a non-monetary asset. Asset or asset or combination of monetary and non-monetary asset. Mm, this we need to see it deeply. Monetary and non-monetary asset. What is the difference? First, we need to understand. Monetary now what cash. So this monetary and non-monetary asset means what is a monetary asset and what is non-monetary asset? So in the monetary asset usually says that as a it's fixed. It is completely calculatable. But the non-monetary asset is not completely calculatable. Why? Example, you buy a share of a company right now. You bought for rupees 10. It is an unlisted company. Can you monitor the value of the company right now and after 1 month, 2 months, or even 10 years? Can you validate it? No, no, because there is no fair market value to get that. That is non-monetary asset. That's an asset, but you can't monetize as fast as monetary asset. The cost of such cost of plant property equipment is a measure of fair value unless the exchange transaction lacks commercial substance. So if there is any exchange transaction, commercial substance is there. Now you'll see how is it commercially affecting a monetary and non-monetary fair value of either of asset received nor the asset given up or reliably measured. So what is the asset what he received? Whether it can be measured reliably or not. These are the thing. It's fair value or not. That means taken into consideration. The acquired item is measured in the manner even in the enterprise cannot immediately de-recognize the asset given up. So it should be measured in a manner. How it cannot immediately de-recognize something. Sir, recognize this as my asset. So as per the indices, when it's recognized, it should not be de-recognized. So such a way you should consider recognizing it. If the acquired item is not measured in fair value or its their cost is measured up the carrying amount of the asset given up. So when it will be given up because You are bringing into some asset into force that is cost mostly. It should be equal to its fair value, right? When it is more than its fair value, then that rise a problem actually. So then they may de-recognize that cost too. Sometimes their probability is there because when you go for a de-recognition or you go for reconstruction of a company or when you go for a merger acquisition listing, the values of stocks, the block of stocks which you show in the books of account should be fair that everyone thinks of. So how you do it, that is the issue here. Subsequent cost, what cost of day-to-day services, replacement cost, major regular major inspection cost. What subsequent cost of day-to-day services. These are similarly the cost of labor and consumables and may include cost of small parts not recognized in plant property equipment. Some bolt, nut, grease, I need oil need to change. Some parts need to be changed. These kind of things that goes on day-to-day. Na? So these are the cost. So you can consider this cost as capitalized. The replacement cost. The cost for replacing a pass, recognized in the carrying amount of PPE if the recognized criteria are met. The carrying amount of replaced part is de-recognized. Now what, sir, I having this part. That part is the motor of this machine. This motor has been damaged. I need to replace it. So of replacing, I'm not going to get any economical benefit. Already what I'm receiving, there is not going to be great change. It's just a replacement of part. Then it won't be recognized in the P&L account. It won't be recognized in the plant property equipment as asset. Or there is no de-recognition, re-recognition, nothing will happen. But if you bring into some different technology that going to operate more efficiently, or consume less energy, or going to get great output than the previous machinery, then this is a replacement cost. Regular major inspection cost. The recognition of the carrying amount of plant property equipment, if the recognition criteria are met, any remaining carrying amount of the cost of the previous inspection is de-recognized. It's not easy to recognize and de-recognize cost of inspection. Example, if you having this chemical industry, chemical producing companies, there will be environment and chemical engineer come and analyze the machine, safety of that machine, they will take care of, they will see through it. The question is how that inspection cost will be considered as my uh, capital expenditure or my revenue expenditure. So first inspection, that will be considered as my what? Plant, plant property equipment. But subsequent expenses can't be considered as asset or can be considered to the cost of the asset. So if you want to recognize cost, first you need to de-recognize the already recognized cost, then you need to recognize it. So there is the great issue there. Measurement after recognition. What is the measurement? The entity should choose either a cost model for evaluation model, asset accounting policy, and shall apply the policy to the entire class of asset, plant, and equipment. So if they follow a model for valuation, that model should be recognized for all the asset. One asset, one model, one asset, one model. So in the pack of asset, every asset have the same valuation model. What is a cost model? Cost model, revaluation model. Cost model is less cost, any accumulated depreciation, any other accumulated impairment losses. That is cost model. Cost minus depreciation minus any accumulated impairment losses. If you get it as cost model. What is a revaluation model? The fair value can be measured reliably should be carried out as a revalued amount less subsequently accumulated depreciation and subsequently accumulated impairment losses. Okay. So considering depreciation and impairment losses, with the market value, it will be considered with significant regularities for a class of PPE, plant property equipment, which asset to be revalued and it's belong. So how it will go into revaluation model? How if you revalued, where it will go? Are based upon their asset and based upon the market value, based upon the uses, everything will be considered to considering for the revaluation. If an asset carrying amount is increased as a result of revaluation, so carrying amount is increased because of revaluation, increase shall be recognized other comprehensive income and accumulated in equity under heading of revaluation surplus. Now what happens if asset values increase? What will go? So your revaluation reserve that will also will rise, right? This is what happen. So asset value increases, revaluation process also increases. This is how it will work. However, the increase shall be recognized as profit and loss to the extent that reverses a revaluation decreases the same asset previously recognized profit and loss. So sometimes the revaluation may decrease. We may increase asset, sometimes decrease asset. When you decrease it, the same thing revaluation as an account also decreased. If an asset carrying amount is decreased, the result of revaluation and decrease shall be recognized in profit and loss account. So okay, the asset has been decreased. What will happen? Where revaluation taken place? Recognize in P&L account, right? Yeah. When you decrease the value of an asset, where will you put? If there is no revaluation, it will be cast in the P&L. Yeah, that is fair value. However, the decrease shall be recognized in other comprehensive income to the extent of any credit balance existing in the revaluation surplus in respect of the asset. Sir, we have a revaluation reserve and asset value and P&L. Now, what is I'm reducing the value of asset. So first, respect to this asset, what is the revaluation reserve? You should reduce it. So if the revaluation reserve is much lesser than what you reduce, the remaining amount should be charged to P&L. Okay, this reduction should be affected in where P&L not only in the balance sheet. Second thing also to comprehensive income. There also it should be affecting this revaluation reserve. This has been said. This is a very important point. A decreasing recognizing of any other comprehensive income, reducing the amount accumulated in the equity under the heading of revaluation reserve should be done there. Depreciation. What is depreciation? Each part of item of plant property equipment which cost that is significant relating to total cost of an item should be depreciated separately. So every asset you should depreciate separately. You can't put depreciation for singly for every total asset. Every asset, what is the date of purchase, what is the number of days used, what is the percentage of depreciation you have charged, every year depreciation, every month depreciation, or even every year depreciation exactly should be done. There should be no bias in it. Depreciation charges of every period should be recognized in the profit and loss unless it is included in the carrying amount of another asset. So one it should be charged every year unless these asset has been considered in the bulk of one asset and that depreciation be charged or it should be charged. Depreciation amount of asset should be allocated a systematic basis over useful life. Systematic basis na every year you should be charged. You should not like a 1 year we charge 1 year. No. Consistency is very important. The residential value and useful life of asset should be reviewed at least each financial year. So, what is the useful life of this asset? And how is the asset is present there? That's what we go for a fixed asset audit. In that audit, what we will do, we will overview the asset, whether the asset is present, whether the asset is being present and the useful life of the asset is there, and how what is the books of account say, how long it will be used. Will this asset will be there till that period? What they mentioned through the maintenance. If not, you should make a changes. If expectation differ from the previous estimate, the changes should be accounted for the change in the accounting estimate according with India said accounting policy change in accounting estimate in year. If there has been case, sir, you have said the asset will be there for next 7 years, but of seeing the condition of the asset, it has to have value of 1 year. No, then the depreciation should be changed or the useful life should be changed. By changing the depreciation also should change. Impairment. What is impairment? Impairment, not derecognition. That's a problem. So booking as loss. The to determine whether property, plant, equipment is impaired, neither should apply in the 36 or impairment of asset. Derecognition. Totally removing it, not recognizing it. The carrying amount of property, plant, and equipment should be re-recognized as they are disposed of when no future economic benefits are expected for in use of this disposal. So I had the asset that has been thrown off. Then should you recognize? I have asset that which can't be used for anything. It going to stay simple. I'm going to scrap it. I have no useful right now. Then you could de-recognize it from the books of account. The Appendix B of NDA 16 provides a guidance and recognition of production of a stripping cost of the asset. So if we go into re-recognition, now what you go for stripping cost? Initial measurement of stripping activity of asset and subsequent measurement of stripping activity of asset should be considered. The entity shall recognize stripping activity asset if and only it is probable that the future economic benefit, improved access to its ore body associated with stripping activities with the flow of entity. How it is probable with the stripping activity, we will get a economic benefit that is a future economic benefit which is associated with the activity that is in stripping activity that is flowing into the entity. The entity can identify the component of a core body for which access has been improved. If something it is improved now, how that is how we have access for it, then we have access for it now. What is the component of the ore body that we have identified in the entity that will lead to as an improvement? That we should see. The cost relating to stripping activity associated with the component can be measured reliably. So if we do, what will be the cost? Then that also we should see. The entity shall initially measure the stripping activity asset as cost, and after initial recognition, stripping activity asset shall be carried on either at cost or revalued amount, less depreciation or amortization or less impairment losses in the way of existing asset in which it's part. So this is all considered regarding the NDA's property, plant and equipment. Thank you.